Washington, Reuters, U.S. economic growth unexpectedly slowed in the fourth quarter as the strongest pace of consumer spending in 3 years resulted in a surge in imports. Gross domestic product increased at a 2.6% annual rate, also held back by a modest pace of inventory accumulation, the Commerce Department said in its advance fourth quarter GDP report on Friday. The economy grew at a 3.2% pace in the third quarter. Economists polled by Reuters had forecast the economy expanding at a 3.0% pace in the final 3 months of 2017. A measure of domestic demand jumped at a 4.6% rate, the fastest since the third quarter of 2014, underscoring the Economia Euro trademark's strength. Final sales to private domestic purchasers rose at a 2.2% pace in third quarter. Strong domestic demand is part of a synchronized global rebound that includes the Eurozone and Asia. Demand has also been buoyed by President Donald Trump's Euro trademark's promise of hefty tax cuts, which was fulfilled in December when the Republican-controlled U.S. Congress approved the largest overhaul of the tax code in 30 years. The economy grew 2.3% in 2017, an acceleration from the 1.5% logged in 2016. Economists expect annual GDP growth will hit the government Euro trademark's 3% target this year, spurred in part by a weak dollar, rising oil prices and strengthening global economy. While the corporate income tax rate has been slashed to 21% from 35% and taxes for households have also been lowered, economists see only a modest boost to GDP growth as the fiscal stimulus is coming at a time when the economy is almost at full employment. Robust consumer spending. Consumer spending, which accounts for more than 2/3 of U.S. economic activity, increased at a 3.8% rate in the fourth quarter. That was the quickest pace in 3 years and followed a 2.2% rate of growth in the July-September quarter. Consumer spending is likely to remain supported by rising household wealth, thanks to the stock market rally and higher house prices, tax cuts, and firming wage growth as companies compete for workers and some states raise the minimum wage. Declining savings, however, are a concern. Savings fell to $384.4 billion from $478.3 billion in the third quarter. The saving rate dropped to 2.6% from 3.3% in the prior period. The burst in consumer spending was satiated with imports, which grew at a 13.9% pace in the fourth quarter, the fastest since the third quarter of 2010, offsetting a rise in exports, which is being driven by dollar weakness. Imports subtract from GDP growth. As a result, trade subtracted 1.13 percentage points from GDP growth last quarter, the most in a year, after adding 0.36 percentage point in the third quarter. Inventory investment also restrained GDP growth in the fourth quarter, subtracting 0.67 percentage point from output after adding 0.79 percentage point to output in the prior period. With consumer spending accelerating, inflation perked up in the fourth quarter. The FIDA Euro trademark's preferred inflation gauge, the Personal Consumption Expenditures, PCE, price index excluding food and energy, rose at a 1.9% rate. That was the quickest pace in more than a year and followed a 1.3% pace of increase in the third quarter. Signs of rising inflation together with a tightening labor market could put the Federal Reserve on a more aggressive path of interest rate increases than is currently being anticipated, economists say. The unemployment rate dropped 0.7 percentage point last year to a 17-year low of 4.1%. The U.S. Central Bank has forecast 3 rate hikes this year, the same number as in 2017. Business investment in equipment grew at an 11.4% rate, the quickest since the third quarter of 2014 and picking up from the third quarter Euro trademark's 10.8% pace. Spending on equipment is likely to be underpinned in 2018 by the corporate income tax cuts and recent gains in crude oil prices. Investment in home building rebounded after contracting for 2 straight quarters. Government spending increased at a solid 3.0%, quickening from the July-September period. A Euro trademark S pedestrian 0.7% growth pace.